ito guys, ito na yung last group ng ating ratios. Check lang natin kung nagre-record. Ayan, recording naman siya. So ito, market value ratios. Basahin muna natin yung paragraph. ROE o yung return on equity reflects the effects of all the other ratios, and it is the single best accounting measure of performance. Investors like a high ROE and high ROEs are correlated with high stock prices. However, other things come into play. For example, financial leverage generally increases the ROE, but also increases the firm's risk. So if a high ROE is achieved by using a great deal of debt, the stock price might end up lower than if the firm had been using less debt and had a lower ROE. Okay, so ano yung sinasabi dito? Kanina, sa discussion earlier, no, diniscuss yung concept ng leverage. So ano ba yung benefits ng pagle-leverage and ano din yung risk niya. So nakita natin na kapag maganda yung takbo ng economy, nag-benefit tayo sa pagle-leverage. Okay? Lumaki yung ROE ng stockholders. Sana naalala mo siya, no? And then nung nag-recession naman o naging pangit yung lagay ng economy, nagkaroon tayo ng negative na ROE. Okay, so yun yung i-illustrate ng risk involved kapag finance ka by debt. Okay? So, hindi porke mataas yung ROE mo is maganda na o ayan no, maganda na yung stock prices natin. Okay? Pwede siyang maging batayan. Pero hindi lagi. Kasi nga, minsan malaki yung ROE. Pero dahil pala yun sa malaki yung utang natin. Okay? And kapag ganun, hindi na natin masasabing related sa stock price yung result ng ating computation ng ROE. Okay, so dito papasok yung ating last group of ratios, ano, para matingnan talaga natin kung ano ba ang lagay ng stock prices natin. Okay, so ito yung kukumpleto dun sa apat na nauna. Yung liquidity ratio, debt management ratio, asset management ratio, profitability ratio. So ito yung pang-5, market value ratios. Basahin natin yung definition. Market value ratios are ratios that relate the firm's stock price to its earnings and book value per share. Okay, so check ko lang ulit nga kung nagre-record. Ayan, recording pa naman. Nadala na ako kasi ilang beses ko na itong ni-record. Hindi naman na-save. Sayang. So, ayan. Ratios that relate the firm's stock price to its earnings and book value per share. Okay? Nire-relate daw yung alin? Firm's stock price. To what? To its earnings and book value per share. So, pakita nga natin yung sample ng market value ratio. Okay? Nire-relate yung stock price doon sa earnings, di ba? So, ito yung una example. Price to earnings ratio. Okay? So, bago mo isulat yan, dito muna tayo. Balik muna tayo. Pinakita lang natin yung formula. Price over earnings, no? Ayan, nire-relate yung firm's stock price to its earnings. Okay? Kasi isa naman sa book value daw siya nire-relate. So, assume na natin na denominator nitong isang formula is book value per share naman. Okay? So, simple lang, di ba? Ayan. So, ayan, tuloy natin yung pagbasa. If the liquidity, asset management, debt management, and profitability ratios all look good, and if investors think these ratios will continue to look good in the future, the market value ratios will be high. The stock price will be as high as can be expected, and management will be judged as having done a good job. Okay? Ayan, basahin lang natin to. Market value ratios are used in 3 primary ways. First, by investors when they are deciding to buy or sell a stock. And second, by investment bankers when they are setting the share price for a new issue of stocks o doon sa IPO natin. Naalala mo ba to? IPO is initial public offering doon sa ating chapter 1 ba yun o chapter 2? Yan, diniscuss natin siya, no? And by firms when they are deciding how much to offer for another firm in a potential merger. Okay, so ginagamit yung ratios natin sa pag-value ng potential na bibilhin natin na other firm. Okay? So yan, puntahan na natin yung mismong ratios. Yan, sulat mo na sa index card mo. Price to earnings ratio. Simple lang. Nakikita mo agad sa pangalan kung ano yung formula niya. P to E. O P over E. So price over earnings. Okay, price per share over earnings per share. So ayan yung ating formula. Isulat mo na sa index card mo. Okay. Basahin natin yung definition. Price to earnings ratio. The ratio of the price per share to earnings per share shows the dollar amount investors will pay for $1 of current earnings. So, ayan. Sulat mo na. Okay. So, basahin lang natin tong paragraphs na to. Ano? As we will see in chapter 9, price to earnings ratios are relatively high for firms with strong growth prospects and little risk but low for slowly growing and risky firms. So chapter 9 pa natin siya pag-uusapan. Ang mahalaga nga dito sa chapter natin is maging familiar sa ating ratios and yung basic na usage niya. Okay, so per ratio nakikita mo, kino-compare natin sa industry average. Okay. So, ayan. So, ito, additional info lang natin, no? Yung mga footnotes dito. Security analysts also look at the price to free cash flow ratio. In addition, analysts consider the PEG or price to earnings to growth ratio. Okay, where the price over earnings is divided by the firm's forecasted growth rate. Okay, so binigay yun yung example, no? Allight's growth rate as forecasted by a number of security analysts for the next 5 years is 7%. So binigay yung growth rate. So pwede natin i-compute yung price to earnings to growth ratio. Okay? So yung price to earnings ratio na-compute natin as 9.8, nakikita mo dito sa taas. And then dinivide lang siya dun sa 7% na growth rate dito. Okay, so nakuha yung 1.4 times. Okay, the lower the ratio, the better. And most firms have ratios in the range of 1 times to 2 times. Okay, so ito, pwede mo siya isulat sa ating index card for additional formula. No? Saan yun? Nawala. Ito. Price to earnings to growth ratio. Okay. PE to growth. Okay? So itong yung amounts dito, yung figures dito galing lang sa ating income statement. Okay? Yung price per share given doon na 23.06 and then itong earnings per share ay 2.35. Puntahan na natin yung next natin na formula. So ito, sulat mo ulit ano? Last chance, sulat mo na para hindi mo na i-post. Price to earnings ratio is equal to price per share over earnings per share. Ayan, ito na, market to book ratio naman. Okay? So, kitang-kita mo ulit sa pangalan, ano yung formula niya? Market price per share over book value per share. Okay, so nakita mo dito, market price yung ginamit niya. Pero price per share lang din yan. Okay, mas maganda lang basahin o mas madaling basahin yung MB ratio, di ba? Then yung PE ratio, price to earnings. Okay, nakita mo, 23.06 yung market price dito per share. Ganun din yung ginamit dito na amount. Market price per share, 23.06. Okay, sulat mo na. Basahin natin yung paragraphs. The ratio of a stock's market price to its book value gives another indication of how investors regard the company. Companies that are well regarded by investors, which means low risk and high growth, have high MB ratios. For Allied, we first to find its book value per share. So itong formula na to, sinulat mo na siya nung chapter 3 natin. Kung di mo pa siya nasulat, chance mo na ngayon, sulat mo na siya. Okay? Common equity over shares outstanding. Okay. Natatandaan naman natin, no? Yung common equity is 940 million. Okay? Divided by 50 million shares. So nakuha natin yung book value per share which is 18.8 dollars. Okay, and then ayan, kinompute natin yung MB ratio. M to B ratio. Bahala ka na kung paano naman siya gustong basahin. 23.06 divided by 18.8 is equal to 1.2. Then, compare ulit sa industry average. Okay, so investors are willing to pay less for $1 of Allight's book value than for one of an average food processing company. This is consistent with our other findings. MB ratios typically exceed 1.0, which means that investors are willing to pay more for stocks than the accounting book values of the stocks. Okay. This situation occurs primarily because asset values, as reported by accountants on corporate balance sheets, do not reflect either inflation or goodwill. So, ayan, normally daw, talaga dapat mas malaki ang ating market price. Okay? So, hindi daw kasi nare-reflect yung inflation and goodwill. Assets purchased years ago at pre-inflation prices are carried at their original costs, even though inflation might have caused their actual values to rise substantially. And successful companies' values rise above their historical cost, whereas unsuccessful ones have low M to B ratios. Okay, so yung concept ng goodwill, sa advanced accounting to matatakil. Okay. So yung inflation, yun yung pagtaas ng prices ng goods. Okay, over time. So ito yung dapat nating talunin. Okay. So, hindi dapat natetenga yung cash natin sa banks kasi nga, mas malaki yung inflation rate kaysa sa interest rate ng mga bangko. Okay. Ayan, so ito. And the second point is known as survivor bias. Successful companies survive and are reflected in the averages, whereas unsuccessful companies vanish and their low numbers are not reflected in the averages. So, ito, concept lang nung yung sinabi dyan ng survivor bias. Okay, additional info lang yan. So, mahalaga nga dito sa ating discussion is yung formulas. Okay, pinakita dyan yung example, no? So, hindi na natin yan pupuntahan. Punta na tayo sa ating next na topic. Itong DuPont equation. Okay, so pahapyaw lang tayo dito sa DuPont. And i-discuss natin to next meeting. Okay? And then, pakita lang natin yung formula ng DuPont equation. So, ito, parang pinahaba lang siya na return on equity equation. So, naalala mo pa ba yung formula ng ROE natin? Net income divided by total common equity. So, dito, makikita mo, tatlong items yung tatlong formulas yung pinagsama-sama. Pero dito sa unang row muna tayo, no? ROA. Naalala mo ba to? Return on assets. Okay, ano yung formula niyan? Net income divided by total assets. Okay? So, yung ROA na yan, minultiply sa equity multiplier and nakuha yung ROE o yung return on equity. Okay, sa second row, pinakita dyan. Ano ba yung pwede pa daw hatiin yung ROA into two formulas. So, profit margin times total assets turnover. Okay? So, ano yung formula ng profit margin? Naalala mo pa ba? Kanina, pag margin daw, ano yung denominator? Sales. Then, ano yung numerator? Kung ano yung pangalan ng margin? Profit. Okay? So, profit over sales o net income over sales. Then, naalala mo yung formula ng turnover? So, di ba sabi dyan? Sales daw over some asset. Okay? So, kung total assets, turnover yung tinatanong, ano yung numerator? Sales. Ano yung denominator? Total assets. Okay? Di ba parang may may technique tayo dito para madali natin makabisado yung formulas. So, bahala na tayo kung paano natin siya i-memorize. Kasi, hindi habang panahon, katabi mo yung index card mo. So, sa ngayon, pwede mo siyang gamitin. Pero the best pa rin kung kabisado mo siya by heart o yung formulas natin. Okay, so ayun na, yung formula ng profit margin and total assets turnover. Magre-result daw sa ROA formula. Okay, return on asset formula. So, demonstrate natin bakit. Nakita mo yung formula dito, no? Net income over sales times sales over total assets. May nakikita ka ba dyan pwede i-cancel? Meron, yung sales, ano? Numerator siya dun sa kabila, denominator siya dun sa kabila. So, nung kinancel mo, ang natira, net income divided by total assets. Yan ba yung formula ng ROA? Yes, yan yung formula ng ROA. So, nakita mo, amazing, no? Yan. Then, itong equity multiplier, bago siya sa atin, ano? Ngayon lang natin na-encounter to. Total assets divided by total common equity. So, ito, sulat mo sa index card mo yung formula ng DuPont equation, no? Okay. So, ano naman, yung isa namang formula na to, yung equity multiplier naman. Tingnan natin kung may pwede tayo i-cancel dyan. Meron ka ba nakikita pwede i-cancel? Meron. Yung total assets. Nakita mo, numerator dito sa kabila, denominator dito sa kabila. So, cancel natin. Ang natira, net income divided by total common equity. Kasi kinancel na natin yung sales and kinancel na natin yung total assets. So, yung net income over total common equity, yan ba yung formula ng return on equity natin? Yes. Ang galing, no? So, dito, DuPont equation, pinahaba yung ROE formula para mas makita ng mas malinaw kung ano ba yung naging galaw sa return on equity. Okay. So, ayan. Then, tingnan natin yung mga susunod na topics for next meeting. Yan, potential misuses of ROE, yung using financial ratios to assess performance. So, dito, yung pag-usapan yung comparison to industry average, benchmarking, and then yung trend analysis. Okay? So, sa ngayon yung formulas muna para hindi tayo mabigla masyado. Okay, and then dito yung uses and limitations of ratios. Then ito, looking beyond the numbers. Yan. So, pwede rin nating tingnan yung formulas na in-upload ko sa Canvas. Tingnan natin, ano yun? Login. Hindi, pala. Office. So, pakita lang natin yung formulas na nandoon. Nasaan ka na? Medyo mabagal yata yung internet ko. Pero sige, ikat ba natin yung video o may hintayin natin siya? Dito na lang natin tingnan. Meron pala ako ditong ayan. Meron ako ditong soft copy. Yan. So, ito yung mga formulas na galing sa ano nangyari? Sa Baisa and Lupisan textbook. Okay? So, mako-compare natin yung formulas na galing naman doon sa sa ebook natin. Okay? Current ratio, naalala mo yung formula sa ebook. Same lang, no? Current assets over current liabilities. Yung quick or acid test ratio, naalala mo yung formula sa ebook. Diba? Current assets minus inventories yun. Divided by current liabilities. Ayan siya dyan. Sa Baisa and Lupisan textbook. Okay, so ang ginawa niya, instead na i-minus niya yung inventories, in-add niya lang yung cash and yung marketable securities o yung mga quick assets. Okay? Mga liquid assets talaga. Okay? Ito naman, asset utilization ratios or activity ratios. O ito rin yung asset management ratios. So dito nakita mo yung accounts receivable turnover. Pinag-usapan din natin yan kanina kay Brigham. Ano yung formula kay Brigham yan? Sales divided by accounts receivable. Okay, dito kay Baisa and Lupisan, ginawa niyang specific. Anong klase ng sales? Yan, credit sales. Okay, bakit? Kasi nga, receivables yung pinag-uusapan natin dito. So malamang, dapat yung credit sales lang yung i-compare natin o yung i-consider natin dito. Kasi, doon lang naman ang gagaling yung receivables natin. No? So ayan, numerator niya, net credit sales. Dinivide saan? Kanina, sa Brigham, accounts receivable lang. Pero dito, in-average yung accounts receivable. Bakit? Kasi nga, net income yung numerator natin. Pag net income item, di ba? For a period. And then kapag balance sheet item, yung denominator natin, balance sheet item kasi ito. For a point in time. Okay? So, hindi siya match, no? So, ang ginawa dito sa denominator, in-add yung beginning and ending, then divide sa 2 para maging for a period na siya. Okay, so mas bagay na sila nung numerator. Okay, so ito naman, average collection period, o ito yung days sales outstanding natin na formula. So dito, kakaiba yung formula niya, no? 365 days divided by accounts receivable turnover. Okay, so pwede natin ito i-compare. So next meeting, compare natin siya doon sa formula ni Brigham. Okay, then ito, inventory turnover. Napag-usapan na natin kanina. Cost of sales, ang numerator instead of sales lang. And then, average inventory yung denominator instead of inventory lang. Then ito, average age of inventory. So, same concept dito sa average collection period, no? Ang formula niya, 365 days divided by inventory turnover. Okay? Then, itong operating cycle, pinag-add lang yung average collection period o yung day sales outstanding and yung average age of inventory. Yan. Then, itong total asset turnover, naalala mo siya sa Brigham. Yan din yung formula sa Brigham, kaya lang average yung total assets dito instead of total assets lang. Okay, ito naman solvency and solvency, leverage, and debt service ratios. So ito rin yung debt management ratios. Naalala mo yung debt ratio? Same lang ng formula, no? Okay, o hindi. Ano yung formula sa Brigham kanina? Total debt divided by total debt plus equity. So lang natin, compare lang natin. Then itong debt to equity ratio, total liabilities divided by shareholders equity. Then itong times interest earned ratio, same lang siya sa Brigham. EBIT divided by interest expense. Then itong profitability ratios, gross profit margin. Okay, anong tanda mo sa margin? Ano yung denominator? Sales. So yan, net sales. So yung gross profit margin, ng formula, gross profit divided by net sales. Yung profit margin naman, profit over net sales. So net income over net sales. Okay, pag return naman yung formula, ano yung tanda dyan? Net income yung numerator niya, di ba? So net income divided by total assets. So dito sa ating Baisa and Lupisa na textbook, ang formula naman is average total assets. In-average yung denominator. Then ito, ROE or return on equity. Net income available to shareholders divided by average shareholders equity. And then market value ratios, net income, earnings per share is equal to net income minus preference share dividend divided by ordinary shares outstanding. So, natatandaan mo yung formula doon sa chapter 3 natin. Net income available sa common equity. Yun yung numerator, no? Then, dinivide sa common shares outstanding. Then, itong PE ratio, price to earnings ratio. Market price per share divided by earnings per share. So, same lang siya. Book value per share naman, ito, total shareholders equity minus preference share capital divided by ordinary shares outstanding. Okay, ito naman, price to book ratio. O ano yung tawag dito sa Brigham natin? Market book ratio, di ba? MB ratio. So dito kay Baisa and Lupisan, price to book ratio yung tawag niya dyan. Pero hindi ka naman malilito. Price o market price to book, hindi ka naman malilito dyan. Numerator, market price per share. Denominator, book value per share. Then yung dalawa, dividend yield and dividend payout ratio. Ayan yung formulas nila. Dividend per share divided by market price per share. Yan yung dividend yield. And then yung dividend payout naman, same numerator, dividend per share divided by earnings per share. So itong formulas na to, magagamit natin siya outside ng course natin. Kapag review na tayo or ano ba yung pwede nating ma-encounter sa labas ng pagtapos ng semester. Baka may qualifying exams na. Pero dito sa ating subject, yung mga quizzes and exams natin, focus tayo dun sa Brigham formulas. Ang mahalaga, alam natin yung concept, no, na pwedeng magkaiba yung formulas depende sa given. Okay? So magkakaroon tayo dito ng exercises na lang para ma-practice tayo. Okay? So ayun. Hanggang dito lang muna tayo and see you next meeting. Salamat sa pakikinig. Bye!